Good afternoon and welcome to Thursday's Market Situation Report, what we call our SITREP here at TGO. That's Top Gun Options. I'm Wiz, Matthew Buckley, and market just kind of wallowing around here and bumping right up against resistance as we predicted. This is going to be, or is very close to be, a quadruple top. 1, 2, 3, 4, right up here at this 2,800 level. We didn't even get all the way up there, and this rally's finally running out of airspeed. At the end of the day, this is it is all about trade, and I'm really starting to feel that I don't know, man. I think a trade deal is already priced into this rally, this Fed relief rally, and most of the trade deal is priced in here. I mean, even if we rip higher on the initial reports that we get some sort of trade deal, I think it's going to we're going to give some back for a lot of reasons. But anyway, Robert Lighthizer is Trump's hardball in these China negotiations, and he said today, hey, expect change. And the biggest things, as we've covered this week, are stealing our intellectual property, the forced transfer of technology from American companies, and China subsidizing their businesses. Those are three massive stones that I just... You know, China, President Xi the other day more or less said, we're not making massive changes to the way we do business. And Lighthizer saying that's exactly what we're going to need. So it's going to be very interesting to see what a trade deal looks like. We're going to get something. Trump needs something. Xi needs something. But at the end of the day, as I keep briefing my members, it ain't about a trade deal. It's about China's strategic dominance, not only in the Pacific, but as a world superpower. I know the president's been nice and complimentary to Xi. Hey, he's really been helping out with North Korea. China don't want no South Korea on their border, right? They don't want a war, obviously. They don't want millions of starving North Koreans streaming into China. That's the last thing they need. But the second to the last thing that they need is capitalism. No kidding. If North Korea ever turned into South Korea and Trump Tower on the beach type of thing, it would be a nightmare for China. So a lot of stuff going on, folks. A lot of moving parts, and we'll see what happens. But some disappointing earnings recently, and it seems like the market's starting to care again. But we got some horrible macroeconomic data today. Let's go ahead and go to the tape. Like I briefed you in Monday's Market Outlook, to Thursday's numbers were going to be critical here. Durable goods and core durable goods. Remember, whenever you see the word core, it means X something or excluding something. So this is X transport. Negative 0.4, we were looking for a positive 0.3, very anemic 0.1. Regular durable goods, a miss. We forecasted a 1.6, 1.2. Look at the Philly Fed. I think this is like a decade implosion low. The Philly Fed was a 17. They were forecasting a little bit of a slowdown, negative 4.1. Weekly unemployment claims, I just really don't look at, but look at the flash services PMI and the manufacturing PMI. The services was okay. The manufacturing is at a incredible low, and existing home sales imploded. So really interesting. In the old days, I'm going to say the market would be down easily triple digits. We're only down about 80 on the Dow right now, and the S&P is only down a couple points. Why? We're kind of in this bizzarro market. I'm telling you, based on this bad macroeconomic data, U.S. existing home sales fall sharply to 3-year low. U.S. manufacturing PMI tumbles to 17-month low. Obviously, every year when this happens, it's like, wait, we forgot that the weather's bad during the winter. But I'm telling you, we should be a lot lower. But in this bizzarro market, bad news is good news. So with bad macroeconomic data, the market looks at itself and says, looks like the Fed might not be too inclined to raise interest rates. Well, we kind of know that already. The Fed chief saying, hey, we're going to be data dependent, which they should have been, is kind of good news for the market. But this isn't good news. First time since 2000, most assets are overbought. This is the most overbought market in a very, very, very long time. And what's overbought? Everything. Bonds, gold, oil, the S&P 500, everything is kind of overbought right now. So stocks, bonds, oil, and gold touched overbought on Wednesday. And what happened yesterday? the Fed. The Fed's written word, they came out with the Fed minutes yesterday afternoon. The written word kind of matched their spoken word. So it was kind of a shoulder shrug. The market really didn't react that all. But as we've covered many times, these moving averages, the 50-day moving average and the 200-day moving average, act as magnets. They either get pulled up to it and hover around it and then pulled up to the next one, or pulled back to it. I think we might see a retracement here back down to the 200-day moving average on the S&P 500 short term. You know, it doesn't sound like the president's going to be meeting with Xi, maybe, if at all. They will eventually, but to the middle of March. So I think for the next couple weeks here, we're going to chop sideways, kind of like we did when we went through this 50-day moving average. I think this, if you cut this action right here and paste it right here, that's what I believe is going to happen. So we're going to chop sideways for the next couple weeks, waiting for a trade deal. And unless it is a knock your socks off trade deal, I think we get an initial pop and then we get a drop. There's just, our earnings weren't that good. We're seeing some earnings right around now and today that weren't super hot. So I don't know, folks. Just kind of, I've been cautiously bullish. And now I'm going to move to market neutral here. I think we're going to chop sideways, if anything, head down. Okay, I got to get going. I got to get ready for our 1 o'clock Analyze Your Trade and weekly debrief. We're going to cover our weekly Amazon trade. We have currently a bull put spread on, but look to leg into an iron condor. I sent out a text alert about it 2 hours ago to look at a potential bear call spread on Amazon and the leg into a weekly options trade. Looked at the 1627.5, 1630. It ran away from me, though. I think I sent out the alert at 73 cents plus or minus 5 cents, and it kind of ran away. So I'd sit on my hands with that. We're going to talk about this at 1 o'clock, so make sure you join me at 1 p.m. Eastern in the live trading room. Have a great rest of your day. Happy hunting. Make sure you hedge, and I'll see you tomorrow for Friday's market wrap-up.